Hi everyone, you are watching Commerce King Academy right now. In this video, we will discuss about chapter number 6, name accounting for bills of exchange. We have done its concepts, theory and also the methods of entries into the journals of both parties as well as dryer or dry. Alright, simply seller or customer. Okay, so dear students, I will give to you an idea or an overview of last video which we have discussed in last video, that is accounting treatment for bills receivable and bills payable. So in this context, we have studied about the selling and purchasing on credit basis, and after that we have drawing and acceptance of bills of exchange upon parties. After seeking this concept, we have discussed format or structure in this context between the supplier and purchaser and dryer or dry, right? And we have quite clear about these concepts with the help of these points, right? As well as its transactions and entries of these transactions into the relevant parties, dryer and dry. Alright, so in this video we are going to discuss about the four options for the dryer, right? In last video we have discussed about these points as well as the concept, that is the options for the dryer when transactions has done between the seller or purchaser, right? So in this video we have option number 1 or case number 1 in the context of when a bill is retained by the dryer or the receiver with himself till the due date. Understand? The writer said in this context that we have studied 4 points. First one, I revise again. First option for the dryer, after making transaction on credit or after drying the bills of exchange on dry, he may have option retain the bill on or till the due date or maturity date, right? This is the first option for the dryer. And the second option for the dryer is discount bill from bank immediately, right? And accept payment from bank. Alright. The third option is this: he may endorse a bill to another party. The third party is one who of his creditors from whom he already purchased goods on credit by dryer for the settlement of his own debt. Why? This is the root cause for making or behind making the endorsement to another party, right? The fourth option for the dryer, he may send to the bank for the collection purposes, not a discount purposes. The reason behind, because the dryer is the account holder of the bank and the bank collect this amount or bills receivable amount on behalf of the dryer and will deposit into the account of dryer, right? So these are the fourth option according to these concepts. So we have first case. The first case is when a bill is retained by the dryer or the receiver with himself till the due date or maturity date. Clear? After understanding the concepts, we have the illustration with concept number 1. So illustration number set, Mr. A sold goods to be valued rupees 20,000 on credit basis on 1st Jan 2005. Understand? Mr. A is a person who sales or sold to good Mr. B on credit basis amounted 20,000 rupees. Understand? After that, on the same date, Mr. A drew a bill of exchange on B for 20,000 rupees at 3 months. Simple is that Mr. A makes a bill of 20,000 value against or for Mr. B at 3 months duration or period. Alright. It was accepted by B, given by Mr. A and accepted by Mr. B. Mr. A is the seller and Mr. B is the purchaser, right? And Mr. B, it was accepted by B and returned to A. So after acceptance or making stamp, signature and other formalities, after completion formalities of the bill of exchange, Mr. B returned to Mr. A. Understand so far? So on maturity, B honored his acceptance. That's it. Transactions has been cleared. So requirement of this illustration: pass the journal entries in books of Mr. A and Mr. B. So when we are moving toward solution, so first we will make entries into the journal of Mr. A's account. After that we will make entries in B's journal account, right? So A is the, so when we will talk about with the seller point of view, we have Mr. A's journal account, right? Because Mr. A is the supplier or seller, right? And also we have the structure or format of journal account. First one is date column, ledger reference column, debit and credit, right? Now we will make the journal entries of seller Mr. A. So on 1st Jan 2005, Mr. A sold goods to Mr. B on credit basis. So we have journal entry with this effect. So B's account will debit amounted 20,000 rupees because Mr. A have credit sales to Mr. B on 1st Jan 2005, and to sales account will credit amounted 20,000 rupees with details or description goods sold for credit. That's it. First entry of credit sale by Mr. A has been completed here, right? And Mr. B became debtor asset for Mr. A because Mr. A received amount in future or maturity date from Mr. B. So Mr. B will asset for Mr. A right here. Yeah. After making sales, the first entry comes into existence in this way, and on same date 1st Jan 2005, bills receivable account will debit amounted 20,000 rupees to Mr. B's account credit with same amount 20,000 rupees with details or description acceptance received from Mr. B, right? B paid his debts by giving acceptance, right? After making sales, now same date, receive bill of exchange with same value by Mr. B. The next entry will be on maturity date 4th April 2005. Cash account debit because cash received by Mr. B to Mr. A amounted 20,000 rupees, and bills receivable account credited here with same amount 20,000 rupees with details or description acceptance received in cash on presentation of bill of exchange, right? With effect increase in cash asset, decrease in bills receivable asset, right? So all the journal entries of A's journal has been completed here. Now we will move toward Mr. B's journal account, which is the purchaser of Mr. A. Making entries into the journal of B's journal or account, we have some important points regarding A's journal. So let's see further explanation of journal entries past, which we have done above. Okay. So first, journal entry. This journal entry indicates that B has become debtor for 20,000 rupees, which we have discussed above. It indicates that B settled his account by giving acceptance of 20,000 rupees, right? The third entry, it shows on due date acceptance was converted into cash. Due date 1st April, the seller Mr. A give to Mr. B 3 grace day or relaxation days in payment, which will called grace days. So grace days are 3 days. So the date will be 4th April. These points are related about above entries. So this point related to the first entry, when become debtor when sales has done, right? The second point is related to the when acceptance received by Mr. B. The second point is related about maturity date when acceptance was converted into cash. You can see here, right? So now we will move toward next. Generally 3 days concessional days are given to acceptor by seller. Clear? So this is the journal account of Mr. B, right? So Mr. B is the purchaser, right? Increase in liability with effect. The first entry, 1st Jan 2005, purchase account debit with amount 20,000 rupees. So Mr. A's account credited here with same amount 20,000 rupees because Mr. B makes credit purchases from Mr. A, right? With details or description, goods purchased for 3 months credit. Simple is that. The next entry is very simple entry. You can see here with same date 1st Jan 2005, Mr. A account debited with same amount 20,000 rupees and bills payable account 20,000 rupees credited here because acceptance is given instead of paying cash to Mr. A by Mr. B, right? So what would be in this effect? Decrease in liability A and increase in new liability, right? So bills payable is a liability for Mr. B because he makes the acceptance to Mr. A on bill of exchange, right? The third entry will be and last entry will be when makes payment to Mr. A. So let's see, dated on 4th April 2005, bills payable account will debit, right? Amounted 20,000 rupees and the cash account credited here 20,000 rupees. With details or description, acceptance honored on presentation of bill of exchange by Mr. A to Mr. B, right? With this effect, decrease in liability, the liability was bills payable and decrease in cash because cash is paid in actual to Mr. A. So with this effect, the bill has to be honored. That's it. So the root cause for making or discuss the illustration number 1 was when a bill is retained by dryer or the receiver with himself till the due date or maturity date, and after waiting on maturity date or due date, the bill is presented to Mr. B by Mr. A and ultimately receive a cash 20,000 rupees, and with this effect the bill has to be cleared honored. Okay, first illustration was related about point number 1 when the bill retained by the dryer till maturity or due date. In next video we will move toward with second concept when dryer go toward discount bill of exchange from bank, right? So keep watching Commerce King Academy. If you like this video, then don't forget share, subscribe and comment. Thank you all.